Good morning. Welcome to Beyond the SEAF model. I'm Jack Kosar. This is effective for the week of January 12th, 2026. Let's get started. SEAF signals this week. We retain industrials and we pick up healthcare and financials. Healthcare and industrials coming in at 5, which is a nice low ranking score, which shows us a little bit of a conviction in terms of the score overall. Definitely nice to see some more scores in the favored category versus last week when we had 2 in the favored category and the rest was in the neutral category. So things are lining up a little bit more the way we would like to see them. We see utilities and technology here toward the bottom. Appears to be a little bit of a sell-off on the AI play with these two paired together. Communication services kind of taking a little bit of a header, going to 6 to 8 to 9 for overall score of 23, and energy knocking on the door here with a little bit of emergence with strategic quarter of 3 and trading week of 3. Quick note before we get to the heat map, just kind of highlight. Occasionally when we see some of these lighter flows, we've had a couple of questions kind of come up in terms of watching some of these sectors bounce from the bottom to the top and from the top to the bottom. So I just kind of wanted to highlight, actually the heat map will help us a little bit here. Wanted to highlight what happens at times for the SEAF model. It's, I think it's a feature, really not a bug, but it can be a little bit jarring when you start to see some of these sectors kind of jump up and down. When we have this heat map here and we have these really dark greens, that tends to correlate a little bit with some stronger flows. But there are times when we have weaker flows. I try to highlight that. That's one of the reasons I bring up the trading week, highlight what the top flow is versus the bottom flow, and also, highlight that number, that 0.4% that we've identified as a key performance metric in terms of, is there conviction on the trading week? When we have lighter flows, when a good chunk of these sector spiders are near that zero line, which means there's not a lot of inflows or outflows for that particular sector. And when we have that amongst several sectors, and it happens for a week or two, what can end up happening is any influx in cash is going to push up the trading week to a high score, which is good. But when we have accumulation of 2 or 3 weeks of lighter asset flows or lighter asset movements, that starts to blend into the technical month, and we end up not having the accumulation that we would expect to see. On the positive side, and the reason I said I think this is a feature, not a bug, is because when there's light flows and we start to see heavy increases of flows into a particular sector, I actually want the model to shift over into that sector instead of retaining something that is light. But again, what happens is these strong flows in a trading week after having some lighter flows on the tactical month, what happens is it shifts the whole number. So, really strong increase into healthcare will move this tactical number up, because the tactical month is a part of the trading week, and light flows, a strong week can push over a tactical month. So it's going to shift the model where you're going to see some of these things jump from bottom to top. Again, this is important in the sense that I want something where heavy asset flows are flowing in to realign itself near the top, but it can be jarring in the sense that, hey, how do we go from the top 3 to the bottom 3? The way our algorithm is calculated, the tactical month is part of the trading week, and those flows are going to move together. So that's kind of my aside. Going back to more specifically this week, healthcare number 1 on the trading week and the strategic quarter. That trading week was at 0.32%, so close to significant, but not quite. The interesting thing, though, is industrial is also at 0.32%, so really showing some strength here up at the top. Energy coming in at third at 0.28, and financials at 0.24. The reason I'm bringing this up is we haven't had a collection of strong inflows for the top 4 in a while, not to mention them all being aligned. It's hard to remember, but the last time, when we see really strong greens, dark greens up at the top and more reds and yellows toward the bottom, the model is more aligned, I guess, towards strength than it would be as if we're seeing that Picasso painting that I mentioned last week. So, kind of just things to look at. Overall, for our sector asset flows, for the 5 days last week, we had inflows into the 11 sector spiders with a 2.3% increase in the net flows. And we can see that 2.3% was accumulated right here. We are trading above that 21-day moving average, highlighting that, there is potential room for the market to go up. And in general, like to point out, when this is the adding up the AUM, the 11 sector spiders into one number, and the 21-day moving average, and this is just the price, the SPY. As you can see here, we've mostly been above the 21-day moving average going back to November, and largely been on a slight upward trend. Now, this is a bit more sideways than upward, but as you can see here, this trend here is sideways as well. As we were climbing up here from August to October, we had about a 5% increase in the S&P 500 over that period of time with that 21-day moving average. So overall, relatively good tool. Again, not a panacea. This isn't going to cover, if this is above the 21-day moving average, the market is guaranteed to go up, and below is guaranteed to go down. Just overall, one indicator highlighting a directional trend of the S&P 500. Headed into our rainbow charts. Healthcare skyrocketed up. Not seeing that as much on the relative outperformance versus SPY, but we are in a somewhat uptrend going back to August, October of last year. So still positively trending for healthcare. We've spent most of our time in this favored-ish area. We took a little bit of a reprieve down into neutral, but we seem to be accelerating back up into upper favored. If we get some sustained upper favored and sustained moves here, we should see a nice little bit of move on the relative outperformance versus SPY chart. But overall, healthcare, good place to be. Energy, just taking a look at energy. Like I said, energy's been kind of a heart attack. I've been kind of beating that drum through all 2025. Looks a little bit to be continued here in 2026, where we get these spikes up in our SEAF model, corresponds with the spike up in the relative outperformance versus SPY, and then kind of crashes back down. We have not seen really sustained flows in energy for quite a while. We're kind of doing that again, knocking on that door to lower favored here. Not a SEAF signal, just on the outside, but positively trended. We are in a sideways pattern here for energy, though we have had a slight little spike up in the relative outperformance versus SPY as we have climbed out of the avoid. So just a place to watch. Not a place to take a lead off yet. Again, really looking for energy to have something sustained, as it's been in a pretty large downtrend going back really the last 2 years. This chart only goes back a year, but energy, not a place to be yet, though knocking on the door. Financials. Financials is our third sector for the three sector trades for SEAF, hitting up into that middle favored area, have been starting to trend a little bit upwards as we hit a deep bottom, really end of October, early November of last year, slowly kind of climbing ourselves out of it. Had a little bit of a sideways move here, but as we accelerated out of neutral into favored, have had a little bit of a pop on the relative outperformance versus SPY. Definitely going to need some more sustained flows out of financials, but starting to pick up some accumulation on the tactical month. That accumulation has not picked up quite yet on the strategic quarter, but if we continue this trend of inflows, those will start to spread into that quarter, and that's when we really kind of start to see that pop. But obviously quite light here on the strategic quarter. A lot more flows coming in on the trading week and the tactical month, which is lifting this thing up. Technology, I'd like to show the top and the bottom. Right now, technology is a place to avoid, deep avoid in terms of our SEAF model with 11s across the board. We do have a little bit of a downtrend, down to sideways trend here in technology as we're crossing down. We are going to be picking up some support on the relative performance side of the chart. Whether that is seen in the broader market or not is to be determined, but negative 0.51% outflow on the trading week. So money continues to flow out of technology as of right now. So technology, a place to avoid as we're starting to break down here from these all-time highs on the relative performance side of the chart. Industrials continues its run. Had a little bit of a sell-off here as industrials kind of came up, but we rebounded and are now up at 5 overall ranking of 5. Industrials 2 on the trading week, 1 tactical month, 2 on the strategic quarter. We do have a little bit of accumulation here picking up in that strategic quarter, which is helping us stay in this particular trend, but nice uptrend going back from the middle part of November, early part of December up through now. Nice positive uptrend, relative performance versus SPY. It continues to be a pretty good place to be, and as it has been for the last couple of weeks. That is all I have for this week. I look forward to breaking down the SEAF model with y'all next week, and thank you.